Okay, morning everyone. Looking at the US stock markets, the Dow has again retreated from the high of 25,400 points level. Since then, the Dow has been spiraling downwards below the EMA 120 towards the 24,000 psychological level. After hitting the 24,000 psychological level, we did see the Dow has been consolidating on a sideways pattern between the 24,000 towards the 24,500 points over the past 2 week trading period. On last Friday, we did saw the Dow has gained about close to 100 points, lifted by the stronger than expected jobs data, coupled with the positive trade deficit data, which is at the 19 months low. So for now, we are going to monitor for the breakout above the 24,500 points. Until we can see a breakout above the 24,500 points, then only we can confirm for the Dow to head towards the 25,000 psychological level and next towards the 25,400 points. In the meantime, any pullback below the 24,000 will see the Dow falling towards the 23,500 points level. Similarly, on the S&P 500, we are seeing a good healthy pullback from the high of near the 2800 psychological level just towards the EMA 120, which is around the 2700, and subsequently the S&P 500 has staged a breakout above the 2750 level on last Friday, implying that this could be the potential breakout, pullback, and the continuation pattern for the S&P 500 to trend towards the first immediate target at the 2800 towards the 2850 level. In the meantime, the 2700 will serve as the immediate defense for now. Some updates on the crude prices. The crude prices has again staged the consolidation breakout between the 63 towards the 67 US dollars barrel level. Since then, crude prices continues to creep higher towards the 75 US dollars barrel level. Subsequently, it traded on a sideways pattern over the past 1.5 weeks trading period. For now, we are expecting the crude prices to see some of the mild pullback or some of the just a consolidation towards the 70. If we can see some of the support along the 70 and recover from that point onwards, then we are expecting the crude prices to trend back towards the 75 or even towards the 77 US dollars barrel mark. But if the 70 US dollars barrel could not hold, then we might see further pullback from that point onwards towards the 67 or even back towards the 63. Okay, some updates on our local front. The FMKLCI has announced just the one-day recovery following the window dressing activities on the final trading day of June, on the 29th of June. Subsequently, the lack of follow-through buy interest has seen the FMKLCI pull back, and on last Friday, we are seeing a bearish engulfing candle was being formed as the FMKLCI has rejected the EMA 9 level, and as well as the falling below the 1670 support level. So for now, we are expecting further weakness on the FMKLCI alongside with the emerging markets. On the local bourse wise, we are expecting the FMKLCI to trend towards the 1650 for now. That will be the immediate support on the FMKLCI. The weakness on the key index came amid the lingering concern of trade tariff between US and China, coupled with the extended foreign fund outflow on the emerging markets. On the lower liners wise, we are seeing some of the similar pattern was being formed recently. We are seeing the FM Small Cap Index has again hit some of the roadblock along the 14,560 points level. Since then, we did see the lower liners has continues to drift lower. It rejected the EMA 20 level, and on last Friday, we are seeing a bearish candle was being formed as well. So for now, we are expecting the FM Small Cap Index to trend towards the strong support along these 13,700 points. But if the 13,700 points were to give way, then we might see another corrective phase on the low liners towards this next support level, which is located towards the 13,000 psychological level. In the meantime, any recovery from now on both the FMKLCI and also the FM small cap will be just taken as a technical rebound. So should there be any recovery from this point onwards, it's advisable for you to adopt the selling into strength strategy. On stocks wise, some of the stocks we can watch out for will be Yongtai. Just give me a minute for the chart to load. I'll just restart the chart for a while. Okay. So some of the stocks that we can watch out for firstly will be Yongtai. Yongtai has earlier recovered from the low of around the 1.30 level. Since then, we are seeing some of the technical rebound phase. Is this seen the first phase of recovery? It rejected the EMA 120, recovered again, rejected the EMA 120. Once again, it recovered, rejected the EMA 120. But this time onwards, we are seeing a potential flag formation of breakout as price has rose and also closed above the EMA 120, accompanied by some of the improvement in volumes on Yongtai. Following the flag formation breakout above the 1.47 cents level, we are expecting Yongtai to trend higher towards the 155 or even towards the 1.59 cents level. The stop loss point will be located below the 1.44 cents on Yongtai. Everything appears to be quite positive following on last Friday's flag formation breakout. We are seeing some of the high volume being taken place. The MACD histogram has returned green, whereas the RSI has rebounded from the 50 level. On Sunway REIT, we are seeing the uptrend in that formation was being re-established. The MA 920, 16, 120 has been in line. Sunway REIT has recovered from the low of around the 1.48 cents level. Since then, we are seeing some of the resistance along the 1.76 cents. And on last Friday, we are seeing a good bullish engulfing candle was being formed on Sunway REIT. Following the bullish engulfing candle, we expect Sunway REIT to trend higher towards the 176. Should the 176 level were to be breached, further upside will be seen towards the 190. The stop loss will be located below the 1 ringgit and 66 cents level. YTL Power has recovered from the low of 73 cents level, forming the hammer candle. After the hammer candle, we are seeing a good recovery as YTL Power has been trading on a sideways pattern between the 1 ringgit and 97 cents level towards the 1 ringgit and 7 cents level. So for now, we'll be monitoring for the breakout above the 1 ringgit and 7 cents. Should price breach above the 1 ringgit and 7 cents, we're expecting price to trend higher towards the 116 or even towards the 1 ringgit and 22 cents level. The stop loss point on YTL Power will be located below the 1 ringgit and 1 cents level. Last two company for today will be firstly is M+. M+, earlier we did see recently a good breakout on last week itself towards the high of 43 cents level. Subsequently, price has staged the pullback phase without significant volumes. So this could be taken as the potential flag formation breakout that we're going to monitor the breakout above last Friday's high on top of the 41 cents. If price were to breach above the 41 cents level, then we are confirming for the T+4 formation or the flag formation breakout towards the 43 cents or even towards the previous gap down formation of 45.5 cents level. The stop loss point will be located below the 39 cents on M+. Last company for the day will be Cyberdynamic. Cyberdynamic is quite similar with M+ as well. We are seeing a good recovery phase from the low of the 3.06 cents level towards the high of 3.47. After hitting the 3.47 cents level, we are seeing a good pullback phase. And on last Friday, we are seeing a good bullish engulfing candle was being formed. So this could be the potential flag formation breakout on top of the last Friday's price of 3.39 cents. If price were to breach above the 3.39, then we can trade on Cyberdynamic towards the 3.47. That will be the intraday target. Should price reach above the 347, further upside will be seen towards the 360 or even towards the 369. Your stop loss point will be located below the 3.32. If you can take further risk, further support will be located towards the 323. If you have any questions, you can put in the chat box and I'll reply you shortly. Viacom along with it, you are seeing a good the trend line breakout along accompanied by some of the high volumes on the 5th of July, and the follow through buying interest was noted on the next day itself. So for DRB Highcom, we are expecting further upside towards the 212 towards the 227. So for now, any recovery it will be just taken as a technical rebound until we can see a higher high and also the higher low formation. Only we can confirm for the a strong recovery on DRB Highcom. So for now, upside will be just limited towards the 212 towards the 227. Your stop loss point will be located below the 188 on the DRB Highcom. PEB has again made a good rally towards the high of 82.5 cents level. Since then, it has staged a pullback without significant volumes and traded on a sideways pattern. So for now, I believe that most of the traders have really taken out position on the PEB. Although we did see some of the rally with high volumes, a pullback on the next day itself with some of the similar volumes and trading on sideways without significant volumes. So I think this counter will likely to trend on a sideways between just the 70 68 cents towards the 73 cents. Until we can see a breakout above the 73 cents, only we can confirm for a recovery on the PEB. But for now, I think that most of the traders have really been out of position on our PEB. So, but if price were to violate below the 68 cents, then it's better to cut loss on PEB. If there's no further question, then we'll end the morning briefing for today. Thank you.